You're back. Okay. You lost the liquid, you're up 2K. No, I'm down to 60. No, I'm saying if you got the liquid. Oh, magic.
Arman, shall we start? Good afternoon, everyone. It's wonderful to see some of you here joining us today in person. And I would also like to warmly welcome everyone joining via Zoom. We really appreciate you taking the time to be part of our today's Dataism Laboratory for Quantitative Finance guest speaker series. And it's my great pleasure to introduce our distinguished guest speaker, Dr. Arman Khaledian. Arman holds a PhD in mathematical finance from Imperial College London and is the CEO and co-founder of Zanista AI, which I hope that we can also learn a little bit about the company and their current activities, their projects. So feel free to also share, some information about the Zanista AI if possible. And beyond that, he has worked as a quant researcher at leading financial institutions such as Bank of America, Millennium, and UBS. And today he's going to, walk us through the interesting and highly timing topic, which is, let me see. From signals to decisions, scaling AI in finance from language models to market behavior. And right after the talk, we will have the Q&A session. So for those who are here in person, you can just raise your hands. And for guests on Zooms, you can either try the raise hands feature, or you can also just share your questions in the Q&A section or the chat box. So without further ado, please join me in welcoming Dr. Arman Khaledian. And mic is yours, Arman.
Thank you very much, Ali. Thank you for having me. Appreciate it. Thank you. So I guess we're going to have 45 minutes, around 45 minutes talk, right? So I may be a bit longer, but I try to keep it to that time. So let me share my screen with you guys.
Sure. Could you please try now? I just made you a co-host.
Thank you. Can you see my screen now?
Not yet? Yes. Here we go.
Okay. So today we want to talk about what's going on from very early history to all the way to what's going on today, and give you a picture of what we're gonna see in future. So without further ado, let's start. The first thing, I think I'm gonna put this, yeah. So the first thing I want to tell you guys is how did we end up where we are now with a very simple background in history. So this conversation we have today, we're gonna talk about AI in finance. So I thought maybe give you a background of finance as well, and also a background of AI. So finance in a nutshell is understanding markets, and markets, they have been around for millennia. And if we go back all the way to early history of Homo sapiens, from very early time, different clans and different tribes, they started to trade with each other, and that was because of each one of them, they have different resources. So for example, because of geography, if you're living close to the river, you're gonna have fresh fish. If you're living maybe near the forest, you may have fresh fruit, whatever, right? So people find out, okay, they can swap these products with each other, and that's how trading literally starts, and as time passes and we become better at basically at the dawn of agriculture, domestication of different animals, long distances, they were traded on foods and by different animals. And we go all the way to the very beginning of agriculture, and that's where things get very interesting, because at the beginning of agriculture, now we have this concept of ownership, and you can have basically you can stockpiles of different stockpiles of different resources, and then comes with it concept of money. And later on, we have the concept of bazaar, or a market, that people with different resources, different products, they all sit in one place and they exchange their goods and services. And the idea of money comes from the fact that we don't know each other. Like, we are 88 billion people living on the planet at the moment, and I cannot fathom or understand more than 100, 200 people in my life to say I know them well. My brain doesn't have that capacity. My brain has around 86, I think, billion neurons, with around up to 100 trillion synapses. So I don't even have a place in my brain to put everyone in my brain. Like, we're limited. Even if I assign one neuron per person, or 10 neurons, whatever is per person, I'm gonna run out of neurons to know everyone. So there's no way we can know each other and we can trust each other and we can say who's capable of what. So money is gonna solve that problem. And the whole financial service is built on that. So you go to the banks, you deposit your money, somebody else comes, they need the money, and they take it. So that's how the whole financial service works, is built on trust. And it's all these financial products is how to facilitate that trust among the economy. Okay, so, and again, these all rise up to the early of the Industrial Revolution. Things really kicked out at that time. We have the start of monopolies and fund and stock exchanges, so on and so forth. And then we have a few phases. We have some globalization going on from end of 18th century all the way to the beginning of 20th century. Then we have great reversals, what happened with the Great Depression, and then the World War I and II. And then again, globalization came back again, especially after the fall of the Soviet Union, again. And especially we saw a boom in electronic markets at the very early 2000s. So that's where technology really got embedded into the financial service and into the markets. And again, now at the beginning of 2020, now at 2026, we have maybe some reversals going on as well. So we may be in a period of time, rise of tariffs, nation shifting to self-reliance. We hear about NATO, what's going on in the Middle East at the moment. So we may be in a different phase. You wouldn't call it globalization, but that doesn't mean technology is not advancing. And if I want to give you one experience, one example of what happened in the early 2000s, and actually to get an understanding of what's going on today, I will look at examples of electronic trading. So electronic trading crushed manual execution. So if you go back at the early 2000s or late 90s, let's say a trading floor of a major bank, let's say major fund, you would see hundreds, let's say even thousands sometimes, of traders, of day traders. They sit on a desk, they pick up the phone, maybe some electronics, but very limited, and they execute trades on behalf of their client. And let's say 20% of their time, they will trade on their own books. That was very profitable. That works really well. It was a very high paid job. Guess what? Electronic trading crushed that. So 90% of those traders, they don't have the job anymore from early 2000 to today. So what happened was electronic trading facilitated automation and cost reduction, and that made those jobs obsolete. I don't need to have 2,000 people in my trading floor. I only need maybe 100 or maybe even 50 or 20 people will do the same job. Augmented with the algorithmic trading, with the algorithmic execution, with all those technology, financial markets, electronic market, low latency trading, whatever, high frequency trading, whatever you name it, right? But that actually was not in favor of all those in financial institutions. So what we saw is that the number of day traders went down massively. The commission went down massively. So now they do more trade, but the commission is much, much smaller, maybe 10x collapsed. So you remember that famous movie, Wolf of Wall Street, right? The guy talks about commission, 50% commission on like garbage stocks. But today it's much like a few bips You know, it's not even a percentage. You know, so that's what we can learn from that is that was just one sector, one job sector, one small sector of the jobs and one niche that went through that automation. Today, what we're gonna see is it's the same. Now AI is rising. Quants, developers, the researchers, name it, everybody feels it. All the white collar jobs, you know, they're all like accountant, lawyers, you know, everybody with the knowledge that they were being paid because of their knowledge. Everybody's at risk of being replaced or something. We see all these massive layoffs. What happened with the traders? What happened is many of them, they changed their jobs, they changed their role. None of them went really unemployed. They just went to different roles, you know. And majority of them, or some of them, become a pop trader, spin-off from banks, and then we saw maybe change of roles, you know, from risk to operations to quants, even some of them. So what happened is routine works get automated, and fewer people do more at higher leverage. So that's really what technology is doing with the job market at the moment. That's what we see, for example, for the example that you just saw with all these tech companies that they're basically like Oracle, for example, there's late 30,000 people, but they are in profit. They're making record profit with less people and higher leverage. So the lesson is old age was doing the work fast. Now new age building the system that does that basically. And we need to get used to learning new skills, you know, and AI is one of them, obviously. So I don't want to have like a rosy picture or a doomsday picture. I just want to tell you what we have seen, what's gonna look like, and just some of the historical equivalences. Okay, now let's go back to the other side, the AI. So I want to talk about AI. So that was the history of market, financial market, where it is now. Now let's talk about AI itself. So AI itself has a history as well. Obviously, if you go back, I would say the first data scientists, proper data scientists, were astronomers actually, because they were the first one that they were working with numbers and with data, huge data sets. They were the first one working with big data. The famous one is Kepler. So Kepler worked with millions of rows of records data, and he spent a couple of decades of his life, a few decades of his life, and he came up with the Kepler's law that was basically fitting a model to the data that the data came up from astronomical observation. That was because of new technology again in the telescope. So they have this metal telescope that they can have 5x or 10x accuracy compared to the previous ones, and there's new data sets. They build a model. Later on, Newton takes on his gravity and he puts his model in a way. Remember that famous model G R1 R2 divided by R squared. That comes from the fact that he wanted to basically fit the Kepler's law, so to make it like an empirical, basically equivalent of that. So the history, I don't want to go to details, but all the way fast forward, we see progressions, we see more complicated models, you see NLP, you see whatever. In the 60s, we have Eliza, the first chatbot, whatever. So models, they feed on two things. So three things at the same time, they really accelerate this. So one of them is absolutely data. Data is very, very important. So data, if you don't have data, it doesn't matter what's your model, you're not going to have a good model, right? So one of the reasons that we live at this age of AI today is because of data that have been gathered through decades of internet, and later on all the data that gathered by the companies internally, digitalization. So all of that huge amount of human data. That's why we have these very capable models. One of them is the data that we have today. The other one is obviously model architecture. So for example, what Kepler used, what Newton used, later on what mathematicians used, you know, all the quants in the early days that they used, Black-Scholes model, whatever. All of that is, okay, the mathematical machinery behind this. What kind of object we can throw at this data that can learn something useful, okay? So the models have been obviously advancing with the rise of neural networks, you know, deep learning, you know, in the early 2000s, cat and dog. And then we saw in the 2017, the famous paper, Attention is All You Need, right? That was where things got very interesting, is that, and now you have a model that it's very suited for language. It's very suited for language, right? And that is because now language is something different from other data sets. It's just, for example, you go from Chinese to English, the order of the words completely change, but the meaning is the same. So you need something that can keep track of the temporal relationship of the objects in a way that can learn it across language and across different topics and can assign them, can understand it very well. So attention was basically that framework that you can learn, for example, all the relationship of all the tokens and all the words in a sequence, not just the long and short. So LSTM was, for example, much weaker than that. But at the transformers, the transformers were actually the right architecture to build these language models, because it can learn the relationships between all those tokens. It doesn't matter if it's a middle, in the beginning, in the end, whatever. And it's generative, which means that you generate token one by one, so you can build a sentence together. So as I said, in the AI world, you need data, you need the model as well. And also the one very important other part is compute, is technology, right? So which means that as these things get complicated, you need better technology for training, for using them, whatever. So again, going back to the extreme elderly, like the model that Kepler was using. So what was his technology, compute at the time, was all these log tables. So they came up with these log table at the time, logarithmic functions, that basically you can convert multiplication to summation. So you can do calculation much faster than what it used to be. So it used to be much, much slower because all these numbers, they're huge numbers, and then the rise of statistics behind it, so on and so forth. But today's technology, so if you match it, it's the GPUs, is parallel computing, it's all these NVIDIA, whatever, you name it. So this is all the three pillars of this AI world is model, data, and GPUs. And again, all of them are limited. So it looks like some of them may be limited than the other ones. For example, now for compute, we are all in limit. Like I'm sure I'm hitting my rate limits on ChatGPT or Cloud, whatever. I'm sure you do hit the rate limits as well, and you don't like it. Why? Because the technology is not fast enough. The infrastructure of the compute haven't been fast enough to catch up with actual demand, right? So there's supply and demand, and the models are capable, they're really good, but again, the bottleneck at the moment is actually the compute itself. Aside from the models, whatever, hallucination, stuff like that, I'm talking about that as well. So let's go back. So what AI performance breakdown? So aside from the topic that I said about compute, yes, compute is basically the bottleneck, but the model themselves, they have problems. We all are aware of them. They are way better now than it used to be 3-4 years ago, right? At the very beginning, October, November 2022, when ChatGPT came out, right? So the models are better now, way better than what they used to be. They're much more capable. They can call tools, agents, whatever you name it. You know better. But there's a bottleneck, and that's the gap in AI. So AI, it's generative. It means whatever you throw at them, they will spit something out. But usually the problem happens when there's a gap in the data. I'll give you an example. Let's say, and this will give you an intuition how these models work actually. Let's say I want to train a model to understand, let's say, an elephant, right? I understand an elephant. So an elephant have different layers of concept. You have the shape of the elephant, the looks of the color, whatever, the tusk, whatever. You have all sorts of the ears, whatever it is, right? So you have different concepts in that. So when a deep learning is learning that, it's learning it layer by layer, feature by feature, on the data that you feed to it, and it learns, for example, this is an elephant or not an elephant, right? However, if the data is limited and it's mixed up with something else, sometimes it may have seen something which is not an elephant, assign it as elephant because some of the features are there. So the problem comes when the data is not complete and you haven't seen everything, you will give wrong answers, basically. It's the same with AI models. It's not visual. We don't see it like that. It's in words, right? So you ask a question, you get the wrong answer, right? For example, the famous example is let's say, all these small models, their famous question was, the year that President Obama was born, was it an even year or an odd year? That number, the year of the year that he was born, right? And looks like the small models, they struggle to give an answer, then they hallucinate. But if you split the problems into smaller problems, first say, what was the year he was born? And then the second one is asking the question was, is it even or odd? Now they can answer. And the reason is because in the data, they may have, the small ones, they may have not been trained on a model that looks at the concept of odd and even, and look at the concept of a year that the president is born. There's no overlap in that data, basically. So because of that gap, you get a hallucination. So you need to mind the gap. Whenever you work with these AI models, you need to go back to it's not just the model, there is the infrastructure and there is the data as well. You need to have a better understanding what kind of data it was trained on. And actually, in the case of AI, you can somehow fix that. So with all these reasoning models and stuff like that, if you know there is no data feed, this model haven't been fed on the data that it's your target, you can actually give a sample of that data. That's what multi-shot prompting or all these COT prompting, chain of thought. So you basically try to fill the gap with the extra explanation or extra example in your prompt. So yes, the model haven't seen that data, but now you can actually connect the dot in the prompt for the model. You make their job easier. So this is the gap that it's already there. We know whatever data you throw at the models, there will be something that haven't seen or haven't come up with. You always find these cases, right? And how to fix that partially is with a better prompt and all these prompt engineering or all these concepts. That's where it comes from, or fine tuning, whatever you name it, right? However, this has a flip side as well. So this was not a very good on AI. On the other side, it can be its superpower. So I'll tell you what it is. So it's a double sword. What I mean, it can be its superpower. So let's say, for example, if you remember, the AI models, they were not good at math at the very beginning. They were very bad at math. They were actually horrible at math because they're probabilistic models, and math is very exact, numerics, whatever, right? The problem was partially solved by bringing these code interpreters or connect and like a sandbox to the model, so you can check the math in Python or whatsoever in a computer, so you don't need to hallucinate about the numbers. However, the models, they become very good last summer, 2025, at solving math Olympiad problems. Now they're gold medalists. A year before that, summer 2024, the model, when they were tested on these Olympiad mathematics questions, they were gaining my 5% to 10% accuracy. Now it's at the gold standard level, right? And maybe even beyond. And the reason is the models, they can do something none of us can do. And that's where the superpower of AI comes in, and it's made a bit too scary, to be honest. And the idea is, let's say somehow we monitor all the mathematicians. Somehow legally, they get NDAs, we pay them, we get all the mathematicians in the world, current ones and dead ones, we take their work, and you record their work. You record how they're working, how they're writing, whatever, how they're doing all the proofs. There's massive amount of data. We don't have it yet, by the way. But let's say we have it. Somebody spent $10 billion or $100 billion on that project and get all the data. And you feed it to a 10 trillion parameter LLM or 100 trillion parameter LLM. And then what happens is, now we have the opposite of the mind the gap. Now we have a data set that no human can comprehend, and no human have it. Like, you have mathematicians in Japan, in China, in UK, in Iran, in Europe, in Americans, North America, South America, right? And each one of them, they have an edge that no one else have, right? They're somehow different from. So each mathematician at a very high tier, they're somehow different from their peers, right? They have something that nobody else have, or a group of people that other people don't have. Now, when you put all this data to one model, that model is somehow unique, that can look at the problems from all the lenses at the same time. from all those lenses that were in the data at the same time. And that makes it a super mathematician, that it doesn't exist. Even if you're the smartest man or woman in the planet, you cannot comprehend that data, and you would not be able to go that far. So that's something that AI in future, that's why all these tech companies, they promise you, again, I don't think it's going to be easy. I don't think it's going to be even profitable. But in theory, we can have superhumans, like a farm of super intelligent scientists in the database. Okay, just something in theory is possible. We haven't seen it so far. So let's go back. Let's go to this slide that is my favorite, actually. And this is all you need to know: AI economy. This is all we need to know about AI economy and how things. For example, I work in a startup, and everybody talks about ROI. Everybody talks about, okay, if you use AI in your framework, for example, JP Morgan, all these companies, banks, hedge funds, whatever. Where are we? Why we're making money or not making money? Is AI useful? Is AI not useful? Whatever, right? So all of that. So here where it comes. Here it's where it comes. So in the y-axis, we have AI performance. In the x-axis, we have task complexity, which means that as the tasks become more and more complex, obviously, the performance of the AIs deteriorates. They go down and even further down. They get, at some point, they disappear. Or at some point, they hit a wall. There are problems no AI can solve, right? So, however, some of the problems that are very complex, some of the problems that are very easy, you can give it to an AI that can solve it, or you cannot solve it, but maybe in 2 years down the line, they can solve it. So as the new models comes in, you have these blue lines shifts to the orange line, which means that now the new models are more capable than the previous ones. For example, you go 2-3 years ago, some of these models, they have no idea about math, and now they're doing math problems way better, even without computers, even without like tools calling, even just the model itself, right? You go from GPT 3.5 to GPT 5.5, there are massive differences, right? But most of that change is happening in here, happening in the low-hanging fruits, happening in the tasks that are not very complex. They're straightforward. You have good data on them, you have enough data on them, and it works. So as time passes, the simple task, the AI become way better at them. One of them is, for example, coding, right? Short, small coding. Let's say solving a puzzle or something like that with coding. They become really good now, extremely good. But you go to the right side, which is very complex projects or complex tasks, and again, they're outside, or they're not very good. The AI may randomly solve some of them, but just 1 out of 10, and may not be solving all of them, or maybe just give you not very good output, right? So AI on this region, it's not doing a good job. And as the model changes, if you go from one model to the next model, the difference is not that much actually. It's very marginal. Most of the margin happens in here. That's where all those leading leaderboards are there. All the leaderboards are based on these kind of tasks. None of these tasks. For example, one of them I will tell you, which is related to this talk, is investment decision making. You want to make a decision. Let's say at the beginning of the year, I have $100 million. How I'm going to invest my money into different companies, into bonds, stocks, equities, crypto, gold, whatever, right? That's a very complicated task. You need a lot of information. You need the right risk-reward basically ratio, right? And that's not an easy decision. So far, we haven't seen any AI turns $100 million into 150 by the end of the year. We don't have that. Whoever is telling you, they're scamming you. I don't believe them. But what does that mean? That means that, okay, that's a very complicated task. You can take the complicated task in here. You can break it down with your own algorithm. You can bring it all the way to here to subtasks. For example, let's say you want to monitor the whole market, just one stock, a specific part of the stock. You want to check their balance sheet, let's say. That's a job of the recent models can do. Anthropic can do a balance sheet analysis of a company. Yes, they can do. It's not really great, but they can do the job, right? So you can take the very complicated task, break it down algorithmically, bring it here, and each one of those small tasks can be done on AI, and then you can put everything together algorithmically. So this is algorithmic AI. This is how you solve. That's what we do at Zanista, for example. Let's say one of our product is exam grading. So we grade fully automatically a handwritten exam, let's say math or physics, whatever, with whatever is the number of questions, whatever is the handwritten of the students, we do that for you. Obviously, if you give that task to an AI at the beginning, it may not be very good, but we break it down to very small tasks, one by one, little by one, maybe 500 subtasks or even 1,000 subtasks. And when you stick everything together, you may have a solution, right? So you can have AI workflow, which means the algorithm is basically very rigid. You have full control over it. That's useful for regulations, for high stake tasks. Or it's an AI agent, which means that even the breakdown of the task is happening by the agent. And that's what that's what Cloudera does actually. Cloudera take a complex task in here, break it down into a smaller one, and then each one of them are done by their model, Opus 4.6, whatever is the new model coming up, right? That's why you see all that syncing on the background. So Opus and ChatGPT, it's not just the model, it's a framework that you bring down complex tasks to smaller tasks. That's why you used to have all those models. Now you don't even have it. The model decides for itself for each task how much compute I should assign, right? And that comes with data, that comes with optimization. And again, this is where the ROI comes from. You may have a complicated task in here, bring it down all the way in here. You solve it actually. You actually have a good accuracy. And the model is actually doing a good job. The next question is it worth it? Does it worth the time, energy, compute? Is it profitable or not? And that question, it's very important. The question of profitability. That means you have an AI solution, you have an AI startup, whatever. Is it affordable? Is it profitable? Do you remember at the couple of years ago, there was these companies that they were selling software developers for $500 a month. They're out of business now. You can do it Cloud Echo with $20 a month. Right? So affordability, it's key in AI era. So your solutions have to be super cheap. You cannot really charge high margins with your customers. That's what I have seen actually. Again, maybe in some very specific domain, healthcare, you can do that. I don't know, because maybe your data is proprietary. Nobody have that. I'm not talking about that. I'm talking about breaking a very complicated questions, break it down into small tasks, and you can solve it. So basically, you ride this curve. That's what AI comes to. So again, and the way that you break it down, you may not need to do 100,000 API call for one task. Maybe you need 10, maybe you need 100, maybe you need 500. I don't know. So you need to have some kind of optimization to go from here to here. And that optimization is proprietary. Is that what you have and nobody else may have? Okay. So if you have an AI company, one of the ways that you can protect yourself is how to go from here to here. Because guess what? The tokens are not cheap. That's why we have all rate limits, because the technology, the infrastructure is not there yet. There is so much pressure on the energy, in electricity, whatever, that you need to be very optimized and smart about how you go from here. And sometimes, guess what? It doesn't worth it. Let's say in my case, if I want to grade exams at the $1 per exam paper, I cannot really do business in India, because they do that with human beings that are much smarter than my AI at 20 bips per exam paper. Sorry, 20p. Okay? So if I have to compete to an Indian teacher, math teacher in grading, I need to have it's not competing, by the way, it's helping them. They're freeing up their time so they can focus on education. But I'm just saying, they wouldn't buy it. They say, the head of the teacher would say, you know what, my teacher is doing that way better much more cheaper than you, and much better than you actually. So again, you need to really, so let's say if you want to build an AI trader, whatever, yes, you can in principle with millions of API calls, whatever, to get something working, but does it worth it? That's the $1 million question. Okay, I think this spends enough time in here. This one as well. No, I'm gonna go to here. So financial LLM application. So what we have seen, what are the applications of financial LLM? So first of all, again, going back, what does LLM is all these AIs, large language models, whatever. So from a technology perspective, they are a new interface. So if you go back to the 90s, you had keyboard, there were with the rise of Macintosh and Windows, you have visual interface, UI, right? You have UI, you have a mouse, you have all these of inputs for the computer. A few decades before that, you didn't even have any of them. You have to use punch card to run a computer, right? So as the interfaces become better and better, more humanoid, right? We have a humanoid interface to deal with computers. So computers and brain and us humans, they have two different worlds. One of them is silicon, it's hardware, it's logic, it's hard logic. The other one is fluid, like our brain. It's like neural network. It's different, right? So again, by the way, at the very beginning of 20th century or even before that, people have debates which route is gonna take us to super intelligent. Is gonna be like these chips, like hardwired intelligence, like gates and logic and X and OR, whatever, or it's gonna be deep learning. And turns out deep learning was faster than the other one. So that's where we are now. So the new technology is making us easier to use a computer. I can just talk to a computer. I can just type to a computer. I can just have a FaceTime with a computer, right? To do my job, to do whatever you want. So all these Copilot, all these new names that SAS is going to be there, whatever. It's all summarized in one sentence, and that is that AI is a language interface between human beings and a computer. That's it, right? So I can give commands. I don't need to write 100 lines of code to do something with the computer. I just talk to it, right? So linguistic tasks, obviously, they can be powered by AI. So for example, vast amount of unstructured text, data, better decision making in finance. How? For example, I'll give you an example, right? So at Zanista, we have a database called Newswitch. I'll talk a bit later. We process around 1 million news per day. 5 years ago, I couldn't do that. I need a team of 100 people to do that. Now I can do that with AI. I can process language at a scale. 1 million news articles. It passes through our system. We get the title, we get the content, we provide sentiment, we attach basically if this news is good for the company or bad for the company, short term, long term, what kind of news it is, what kind of macro. You see, not just ourselves, other startups like AlphaSense, for example, it's a very popular one I see among the discretionary traders, right? So you can talk to it to a vast amount of data. You don't need a team of researchers to put things together. And that means what's happening in the financial service, that means that actually the speed of processing information goes much faster. So I'll give you an example. When slavery ends in the US, there was like a few months after, like maybe 6 months or 9 months, maybe 3 months, whatever, I don't know, remember the time numbers, there were still slaves working on the fields. Because the Civil War was ended, slavery was abolished, but the way that information was propagated was so slow at the time that it took people months or years to get the information. Even at the World War II, when the war ended, there were still Japanese soldiers in some islands fighting the Americans, right? So it took them a few months to get that information. Not anymore. Now we use it at the age of internet, things goes faster. And guess what? AI is a catalyst. AI propagate information much faster, and there was actually studies on that. So there was this gentleman at Singapore Business School. So they look at the 2024, there was some, or 2025, there was some outages of AI across the US, like ChatGPT and other platforms, for like outages of just AI platforms. And they look at during the NYSE time, when there was those 8 outages with a very high statistical accuracy, there was less number of trading activities across the market. Right? Which means that the trader who was about to put a trade, they take time to process information. When they don't have AI, maybe that processing information slows down, right? So AI has a strange relationship with volatility. In the meantime, it increases the volatility, but in the long term, maybe decrease it because now we can make decisions much faster. Let's say we are not sure about the decision. It takes a few days to price it, but it takes a few hours or a few seconds, whatever is your timeline, to price a new information. So the arrival of new information and that information becomes to the price, it's become faster now because of AI. Okay, so that's one thing that we can see. The applications of AI in finance is not just sentiment analysis, it's actually information overload. That's again one of the things that we do at Zanista, just to promote ourselves, is information overload, right? So AI can be a layer to go through millions of news articles and give you only the ones that matters to your portfolio. If you have a portfolio of 20 names, you don't need to read a million articles. You don't need to have thousands of articles. You just need what matters to your portfolio, and AI can facilitate that, right? And there's different approaches, but I would say our approaches is that we want to do information overload. So before AI, even before AI, we had huge information overload. Now we have even more. I'll tell you what. So when we were kids in the summer, if I had a book to read, I was happy. I was going to the library, pick up a couple of books, read it through summer. Fantastic. Okay, that's a great summer. Now I have too many emails. I have too many articles to read. I have too many notifications. I have too many whatever. There's so much. Our brain is burning on all these information that comes to our brain, social media, or Instagram, whatever, right? So maybe AI can be a good tool to tackle that information. Maybe I don't need to look at everything and read everything. I may have an AI agent that's done that for me. Hey, I am this person. I'm interested. These are my interests. Whatever happens in this, maybe you see Apple News, something like that, tailor to your portfolio and yourself. So that's, I think, one of the use cases of AI. And again, that's the problem scaling AI. Why we don't see that happen? Why not everybody have an AI agent yet? Why we don't have, for example, Microsoft, they have huge AI infrastructure. Why we don't have Windows fully AI, right? We have the technology. We have the new models. You can literally give your computer to an AI and talk to it instead of writing commands or moving my mouse. I can do that. There are some like OpenClaw and stuff like that came around. But again, they're not, the hype is done. And I'll tell you why. Because if you want to use the most capable model on your Windows and connect to internet, obviously, right, on a server, and do all your jobs, that's gonna be so much computationally expensive. If 1,000 or 10,000 people, all the servers of Microsoft will go down. We don't have the infrastructure yet. And that means we need to, it's the same with the internet. At the beginning of the 2000s, we have the dot-com bubble because we didn't have the proper internet infrastructure in the world. There were so many websites, yes, but not every home have internet. There was no phone to have internet. iPhone came out much later, right? Stuff like that. So before iPhone, there was phone with internet, but I mean, the way that we use it today, basically. So I think it takes some time to get to the place that the current technology have its full potential unlocked. And the bottleneck at the moment, again, when you want to scale things up, you hit the wall basically at the moment. Okay. So again, one of the other applications is time series reasoning. So the language model, they can help with the time series. They can find some basically patterns in them. But guess what? Maybe you should not use LLM for time series prediction because LLMs may not be the best. And turns out there were so many studies that still the smaller models may be a better suit for time series analysis than using LLM. However, there are something called foundation models. Foundation models that are like language models, but absolutely just learned on time series. So looks like the new foundation model that came out recently, last a few months or so, we have breakthroughs in market microstructure, economical time series analysis, right? So the new model, the foundation model that comes out, some of them were not really good, the one that came out from these big labs at big techs, but the new foundation models coming out of financial services, some of them are really good, are good. For example, you can use them for fraud detection. You can use them for anomaly detection. You can use them for market simulators, right? So, and they're entirely copying the architecture of the transformers at the big scale, at the big data that they have. And the new models looks like they're doing a good job at time series analysis, not LLM themselves, okay? So I think we talk about this beyond sentiment analysis. Okay, what's happening? So beyond sentiment analysis, AI can be used in so many things. Again, structured events, looking at so many critical data that already knowledge graphs exist in the big companies. Like I remember when I was working at these organizations, as senior managers, they need some kind of data about the company, cascades down to like 3-4 level of management, comes to the analyst sitting at the desk to look at different data sets that they have and spend the whole week to put the data together. Now you can do it with one prompt. So the senior manager, if they have the proper infrastructure in their companies, they can just get all those data at once. So you can query multiple data platforms at once with just AI. So again, the senior management, they can have a better way of running their own company if for big organizations, if they have the right infrastructure, basically. And the reasoning models as well. There are some good reasoning models coming up for finance, specifically for finance. And I'll tell you why. Going back to the gap in the data, right? So in finance, I'll tell you what's the main problem, AI in finance. It's that what really ultimately matters in finance, the good, well-informed decision. That's all you get paid in finance. Even if you're quant, technologies, portfolio manager, risk manager, all of these guys, they want to do and help the organization to do a well-informed financial decision. And guess what? LLMs, they don't have a good, they cannot do that. I'll tell you why. Because the data that they have learned on, it's not really a majority of internet and average people, right? They're not sophisticated financial professionals to do that. However, Anthropic, I see one of the first companies that jumped on that trend and hired a few ex-bankers to get their experience and experts and actually to train their model based on that data so they can have a better financial model. But again, it's not enough. And the bottleneck of it, we did a paper actually on this. It's in the references that basically the bottleneck is understanding risk. Risk, it's not easy to understand. You have the whole department, you have the whole math and statistics to understand risk. Risk is not something intuition, by the way, for us humans. It's very complicated. It's a very complicated concept. And I'll tell you what, the guy who actually rigorously, mathematically formulated probability theory, Kolmogorov, was in the middle of 20th century. With all the, so probability, so basically risk rigorously was defined mathematically at the same time that you have atomic bomb. So something modern. It's not really old, and we don't really understand it well. We have good tools for it, like volatility models, whatever, in financial services. Not perfect, okay-ish, I would say, models. And now let's say these LLMs that they have no clue about risk. So the study that we did was like this. When the first LLMs came out, they were not very good at understanding risk. They were too agreeable. They were risk averse because they were trained to basically please the users. They were trained to not do anything dangerous. So they were extremely risk averse, at the same time, very agreeable, right? So whatever you tell them, they say yes. And also they still do that, by the way. And they were extremely risk averse. They didn't have a good understanding of risk, right? They don't want to disrespect you or say something to upset you. So they were very on their best behaviors. However, we know some of the good traders, they take risk. They take bold risk based on the information that they have, right? So unless we get all the information from the brain of these good top tier traders, we wouldn't be able, even if we get their trades, we cannot really train a model to replicate them, because yes, you have the trades, but you don't have the reason. So the reasoning is very important, how you make that decision from point A to point B. We don't have the data yet. So unless we don't get that data, even if you have the smartest LLM, there is some rumors about, for example, these new models of Anthropic. They're not releasing it to the public because they're super smart. Even those guys, they don't have the proper risk-reward relationships because it's not in their data. Nobody has that data, by the way, right? So you so we highlighted that other authors, other papers have done it as well. But again, nobody have sit down and open one of these brain of one of these large language models and find out where exactly is the risk layer, and I can inject whatever like a electroid over it and change the risk behavior and see how I can fine tune it to my own good. So that's something worth doing research. I have seen many people at other conferences as well raising it, that LLMs understanding risk is very crucial. It's going to be profitable. We don't have it. And unless we don't have that, maybe you should not use LLMs in your decision making. Maybe you should just stick to the part that you do knowledge graph, structure event, reasonings, getting me all the data so I can call the shots and I can make the decision myself. Unless you somehow take your decision, make it into an algorithm, and you can run that algorithm automatically. That's what happened in the early 2000s, going back to the beginning of the talk, that we have this algorithmic trading coming up. So the traders, they helped the quants and the developers to automate their job. They take their basically rules of trading and they embed it in the codes. Maybe something like that can happen with the decision making as well. But again, nobody has the data of how, for example, Steve Jobs make a decision on releasing iPhone or iPad, whatever. We don't have that. Unless we get that data, we cannot really rely on these models to call the shots. You can use them for brainstorming, experimenting. Let's say in these 10 scenarios, what you would do, whatever. It's a very good tool for experiment, by the way. It's a very good tool for research. You're gonna do much cheaper research with AI. You don't need to have 10 people to do 10 things at the same time. You can have some of them at AI. And guess what? Maybe some of those experiments really lead into something meaningful. Okay. And so this is another part that I think it's interesting as well. There's a seam of papers that integrate AI insight into portfolio management, AI-driven decision making. And I'll give you an example. Let's say Black Litter Man, or let's say Markowitz. Say you have an estimation of the covariance matrix. You do some kind of optimization, and here you have your portfolio. It's 70 years old mathematical statistical method, right? Portfolio optimization. It's not new. However, because now the quants, they have something at their something new. By the way, if I'm running over time, please let me know how much more time we have, Ali.
We are quite flexible, so feel free to continue.
Thank you. Okay, good. So Black Litter Man, Markowitz, all of these guys, most of the quant models that we have, volatility, whatever, they were only based on price data. Most of them, they were based on price data, volume data, LOB, the high frequency trading, whatever. But now you can use other data. You can use textual data. You can use graph data. You can use video data, voice data. All of these now, you can somehow translate them into numbers, take those numbers and inject it into your current model and have a new, basically, quant model. So I think we're gonna see. I know people are doing this, but by the way, at the moment, and I think we're gonna see. So you're not gonna throw away all your quant models. You're not gonna throw away Black Litter Man, whatever is your model you use for your portfolio optimization, but you augment it with AI signals. So for example, one thing that one of our clients is doing is get the news data that you provide. That news data have sentiment score, relevance score, have some kind of, let's say, embedding. By the way, I didn't talk about the embeddings. Now it's a good time. So the language models, the way that they work is whatever comes into them, first it becomes tokenized, then those tokens convert into vectors. Those vectors will pass on through many, many layers of AI, of attention layers. And at the end, you have a new vector and a new tokens and so on. So that's how it works. So it converts meaning into numbers. So as long as you can do that, that means that now the quants, they can do basically the job of the analyst, of the research analyst, which means that now they can quantify all these information into SEC filing, news, whatever information you have. And this is somehow, which means that the quants and the fundamentals, they become closer, quantamentals they call it, because of AI. AI is one of those tools. It's gonna basically make the gap go away, basically, bridge the gap, basically. Which means that the firms that they were quants, now they can do some discretionary trading. The firms that they were discretionary, now they can do some quant trading. We already see that trend now, which means that if you're discretionary firm, now with a smaller budget, you can have a quant team with help of AI, and also the AI tools themselves. You know, they can, for example, now if I'm a portfolio manager, discretionary guy, I can have some quant strategy maybe run for me as well. Maybe I can ask my AI to do some momentum, whatever, right? So, and the same, if I'm doing a momentum, we actually did a study with a master's student at Imperial College. We combined momentum on the price with the momentum of the news, and it turned out to be a better trading strategy than the momentum itself. So when you trade momentum, all the information that you look at is the volume, or some of them, or you look at basically the returns. Who are the winners? Who are the losers? I'm gonna I'm going to buy the winners and I'm going to sell the losers. That's momentum. Or reversal. I'm going to buy the losers. I'm going to sell the winners. That's reversal, whatever. What if now you use the news data, you look at the flow of the news, and that can give you a new signal. You can somehow quantify it with whatever method you have. Is it embedding? Is it sentiment scores, relevance score, whatever you have? You quantify it, you put it into your simple mathematical model and work with it. You can do with volatility prediction. Now I just saw a talk at Bank of America that people at Cambridge and Oxford, they have these models that basically embed multi-model information into volatility models, and turns out to be doing a better job. Again, so this is something I think it's very exciting if you're working in quant research. This is a topic I think it's worth really going into, and that is making better decisions, more informed decisions based on better data, basically, not just price data. Not all the information are in the price data. So you may look at other data and have a better results. Okay, again, multi-agent trading system, everybody talks about it. We have seen some early results. Again, none of these are profitable. I have seen people run these agents live for a few months. They're doing okay, but none of them can really tell you out of sample, oh, we really have a winner and it makes money, because the agents, they need to be very complicated. You need to have risk agent, macro agent, quant agent, analyst agent, and you have some kind of hierarchy in that. Who's going to call the shots? I just saw a paper the day that basically one of the problems that we have with all these AI agents is that they say yes to all the information. They treat all the information the same, which should not be the same. Some information, they have different sources. So that's what we do with Newswitch, is the different news sources, they have different weights on the news and the impact on the company as well. So multi-agents emerging, I have high hopes for it, especially this year. I think we're going to see some breakthrough. And I'll tell you why. Again, going back to the problem of the risk and reward and understanding LLMs. LLMs have a good understanding of risk. I'm not saying they have a perfect understanding of risk. I'm just telling you they have a way better understanding of risk than what they used to be 2-3 years ago. So if you use multi-agent trading 2-3 years ago, you will definitely lose your money. This year, you may be flat. You may not really gain a lot. I'm not sure about the next year. Maybe next year or end of this year, we may see some emerging AI hedge fund. By the way, that's one of the themes that Y Combinator that put in their requested hedge startups. It's AI hedge funds. So I think it's also an interesting approach, how to automate the whole job of a hedge fund. Okay, going back to the early 2000s, they automate the job of a trading desk, just one desk, execution desk. Okay, now the day trading. Now maybe we are on a verge of somehow, with a hybrid of humans involved, we can have smaller hedge funds that they can handle much more volume of asset allocation than the previous generations, or the current hedge funds, they somehow do some automation in their whole workflow, from platform, risk, data, trading platform, so on and so forth, regulations, audit. For example, I had a conversation with one of the hedge funds actually a while ago. The guy was in the audit department. I can't disclose the location, the firm, but basically he told me that out of 100 people they have in their team, so they were basically looking at the logs of all the trades happening inside the hedge funds, and they were looking for fraud. They were looking for insider trading, things like that. So they said they have 100 people in their team. They have now 22. 80 people left their jobs because guess what? AI may not be good at making decisions. AI is actually a very good monitoring tool. Going back to information overload that I mentioned to you. So it's a very good tool for monitoring your data. So you can automate some part of that with some human oversight. You may do a job of a much bigger team. Foundation models transforming financial time series. Again, this is really getting exciting this year. We have a famous paper revisiting LLMs. I think that's Kronos model, or now Trade FM, the new models. I'm going to put it into the references here as well. By the way, I'm going to share the slide with Ali. He can share it with you guys with the list of the references that we have. So with the links and stuff. So the Trade FM was basically JP Morgan using all their data that they have, trading data, and they build a transformer that actually it's a very good market simulator. You can use that in trade simulation, in building new trading strategies or new execution strategies, right? All of these, so they can be very useful in so many ways, you know, in the risk department, because now they can understand the tail much closer to reality than it was to. Obviously, it have its shortcoming. It cannot go really into future too long. You may need to have some special days in, for example, the day that you have rebalance days in the US, or let's say all these index rebalance or option expiries, you know, so the third Friday of whatever at the end of each quarter, right? So all of those days, there are special days, there are some special rules going around it. So you may use it for some other cases, but not all the time. So I think we're getting closer and closer how to use really AI for foundation models for time series. I see very good progress this year. So I'm very happy to see what's going on in this space. Integration news and price data for insight. Again, we talked about it. Again, just say we do have that. So we have this newsletter that looks at all these news and put it together. Multimodal language models, cross-model temporal fusion, that you can have basically risk models that can understand not just price data, but news data and merge them together. I've seen some good progress on that side as well. I don't want to go into much detail. Again, macro microstructure, Trade FM. Okay, it's here. I listed it here. Yeah, Trade FM model just came out. Deep LOB. All these models really good. They're not really language models, but they use the language model architecture to apply to financial markets. Okay. And again, this is talking about our paper, understanding LLM behavior under uncertainty. So this is one of the things is very important to really look at. It's not just AI, it's all the quant model. So what is happening is all these models, they reward accuracy. So which means that they have benchmarks, and based on those benchmarks, the loss function trains to be in a way that can learn the best accuracy. Let's say minimize the error function, right? That's all these models do. But guess what? Sometimes we don't really need to know, we don't need to be accurate. We want to have a better understanding of uncertainty. We want to know until where we can go and we will be fine. Okay, where is that limit that I can go and I will be fine, up and down of that target, whatever, right? So because of that, the models, they don't really perform well across risk, ambiguity, paradoxes. So we did some experimented, for example, like understanding infinity, LLMs that don't really have a good understanding of infinity when they play games that the expected value is infinite, like the famous one is the St. Petersburg paradox, right? So some of them, the early versions, they were really off. The new versions, they're much closer to human baseline, basically. And again, I'm gonna stop here, and the 5 sins of AI models in general that have been applied to. So this is done by Kong, and they looked at 164 papers, and they find out all the problems that you see in these AI papers. One of them is look-ahead bias, obviously. So you cannot have look-ahead bias in your model. The model may have seen something in the past that you now apply it to a trading strategy. So you cannot really say the performance is coming because of your strategy, but maybe because the model have seen the data before. I'll give you an example. Let's say I want to use AI in some kind of stock picking, and it does really well in 2024 and 2025. And guess what? Maybe the model that you're using already have seen that information, already have seen that Apple, when that announcement came out, Apple price went up. So it's picking Apple because of that. Even if you go around it, even if you remove the name of the entity and just use the information name without any name of the companies, still that structure of the news or information may be available in the memory of the model. So you cannot really go around it. And also, one thing else that nobody talks about it, and that is, of course, if I have an LLM today and go back 10 years ago, of course, whatever trading strategy I come up with, it's gonna beat all the trading strategies. Because guess what? I have the best technology. Same, if I use the current financial technology and go back to the early of 20th century, of course, if I use just very simple technical analysis, I'm gonna make money because they were not priced back then, right? So again, all of this is telling you, you should really compare apple to apple. So when you use LLM for a trading strategy and you use all these backtesting, even if you there is something called time GPT, which means that they train those LLMs. There's a company actually doing that. They train those LLMs up to a certain date, information on that certain date, so you can use that from that cutoff date for future. And for example, if you want to test your model for 2022, maybe the model that was trained up to 2021 is useful because I haven't seen that data. But guess what? Even if you do that, my objective is you're using a technology that was not available back then. So if all the traders have that technology in 2022, their trading behavior would differ. The markets are dynamic. They adapt to new technology. There will be new equilibrium, right? The same, if you use the best technology today, you go to the market, guess what? Other people are using the same technology. Maybe you have some kind of proprietary data, but the technology have been very democratized. But that's what you have seen with this new technology. It's democratized. I can talk about that. For example, social media democratized attention. So attention goes, you just need to, CNN or NBC, nobody watched them today because they were monopoly back then 20 years ago, not anymore. Social media democratized the attention economy. AI is democratizing knowledge and skill to a certain point, right? So that's also, but again, the bottleneck is compute. Even if I have the best AI model and you have the best AI model and we use it for trading, if I have more compute than you, I'm gonna be the winner. I can use it more often than you. I can use it for more complicated tasks, break it down to smaller tasks. I can afford to spend more on my compute bill than you. So I may have an edge against you. Again, that's something else. Obviously, survivorship, everybody knows about it. Narrative, objective, and cost through these papers. Narrative bias, again, LLMs are plausible. They're always giving you yes sir kind of attitude, or casual causal stories. Objective bias, we talked about it. And cost biases as well. People do not take into account latency, inference cost, trading cost, compute cost, all of that. And again, regulations as well. Obviously, I have. I don't think we can talk about it now. I think I'm gonna finish with. Yeah, I'm gonna stop here. There's more to talk about, but I think I don't want to take it more longer than it is now. Thank you. Thank you very much.
Thank you, Arman, for that fantastic and very insightful presentation. I think now we can move on to the Q&A session. And if you don't mind, I can probably start with a quite general question. And I was wondering, what are like the big challenges that you faced when you were implementing large language models into some real world problems or even like trading strategies?
Very good question. Very good question. So you have two extremes of the problems. One is that AI is the biggest risk of AI, which means that if I built a tool with AI and I did it really easy, I'm gonna be out of business very soon because AI can do that the next day or the next month or the next year, right? You remember all these coding tools, augmented to Chrome, or do you remember there was tons of tools people were using and paying for it, right? None of them are in business because guess what? If you do just one layer above AI and you can sell that, you're in trouble. We did that ourselves. We had tools like that. A couple of people liked it, and guess what? 6 months later, AI ate us. ChatGPT, whatever is the new tool, right? So that's from this side. So if you go for low-hanging fruit, you're gonna hit the wall. We learned that from early time. I said, you know what? I'm not gonna go even spend my time on that, right? So let's go to the problems that are very complex, very complicated, and nobody wants to do them. They're dirty and they are literally boring. Back office jobs, grading, information overload. Those are jobs are not cool. They're not very I would say, and they're tedious. And the challenge there is two things: make it fast with AI and make it affordable. Make it fast means that you have an infrastructure that can work at a scale that nobody likes to wait. So you have to have a product that actually execute very fast. And there is so much optimization. For example, we use all sort of machine learning methods. We use all sort of engineering problems, that how we can make this faster, right? While having a good accuracy, while being profitable, right? So all of these are challenges. Really, the real world is you need to be fast, affordable, and accurate. If you don't have even one of them, you're not in business, right? So the main challenge is how you're going to do that. How you're going to build a cheap, fast, reliable product.
Yeah, thank you. And here, at DLQF Lab, we have researchers coming with from different backgrounds: computer science, economics, computational modeling, data analytics. Do you have any hints or advice for junior researchers? What sort of skill sets they can probably learn at this stage, and what sort of topics might be quite hot right now in the near future?
Very good question again. So it's changing very fast, but obviously the basic skills are the same: problem solving. People love people who have good problem solving. So problem solving is something I don't think is going to go away. So, but the problems that you're going to solve, they may change. So I think going into future, we need multidisciplinary problem solvers. They have a good understanding. Let's say in finance, if you want to be a good quant, you need to be good at coding. You need to be good at understanding the market dynamics, economics, right? Same. You need to understand, let's say, and stats, working with data pipeline, big data, technology, things like that, right? So again, it's a multidisciplinary field, right? So you cannot just be good at coding because you may be good at the job. So you may have different layers, different disciplines at the same time, and the problems too, I think, are gonna raise and are gonna be interesting in the intersection of AI and finance, as I mentioned, information overload, decision making with AI, like augmenting the current AI infrastructure, the current pricing models, risk models with AI, and also foundation models as well. I think those are interesting in general. And what I would say, it's going to be much cheaper to do research anyways. So I think the AI is a productivity tool. So if you learn how to use AI in your favor, you can ride this AI basically boom, which means that you're gonna be more productive. So it's not just being a good researcher; it's being productive researcher. So if you used to have 10 papers, same quality in 1 year, 2 years ago, now you can do 20, maybe 30. I'm making numbers. Those are outrageous numbers, but I mean, your output may be more with a good quality, right? Because now you're more productive. So I think having that productivity, increased productivity with AI itself, it's something I think we're gonna all learn how to do that.
Yeah, thank you again. So now we can take some questions probably from the audience in the room, and then we can also see who in the Zoom wants to participate. Do we have any questions here? Yes, go ahead.
Yeah, so something that I was really interested in that you mentioned before was kind of the future capabilities of AI, and how in the diagram that you had, with the state that we have with AI right now, it kind of starts parabolic, right? I guess logarithmic, and it gradually goes down. But then in the future, there's problems between a complexity for whatever index you were using between 0 and 2. It kind of is flat for the earlier problems before it starts to become logarithmic, right? And you also mentioned that breaking down these problems into subtasks will help take advantage of these progressions that we'll see in the future. So you mentioned that really complex tasks trading and coming up with strategies, allocating assets and things like that over the long term can be really difficult. And I was just curious what your perspective is on how kind of you mentioned a little bit about having problem solving skills. Having those skills are important, but we were seeing things like more data centers being built out, they're getting cheaper. if we have things like small modular reactors or like small nuclear reactors, we can start building them and taking advantage of area like in the countryside as well, not necessarily close to water. So I'm just curious what your perspective is on, with how exponentially, the capabilities of AI are increasing and costs are decreasing. Will we ever get to a point, I guess more specifically in a trading context, where AI may even be more capable than, humans, and, where you think that kind of industry will be headed into the future? Also kind of on the topic of, you mentioned like AI and hedge funds as well. I thought that was really interesting, but you mentioned that the AI scale is getting bigger and the number of people working at these companies is decreasing, but their leverage is higher. So do you think that the amount of people working at these companies will keep decreasing and their leverage will keep getting larger? What sort of skills do you think these few people working at these top hedge funds will have? Where do you kind of see that going into the future?
Okay, thank you. That was a long, good question. So yeah, I get you where you're coming from. So I think, first of all, nobody can predict futures. I mean, if I was really good at predicting future, I would just trade and make money. Let's say like that, right? However, I think we can have some pictures from the past that we can say maybe it looks like that. For example, I give you the example of electronic trading, which means that electronic trading really accelerated at the early 2000s, but it hit some walls. If you remember 2009 or 2010 flash crash, in like a few minutes, the whole NASDAQ went down 9 or 10%. Billions of dollars evaporate like that because of these algos that were trading against each other, and there was just systematic problem that everybody was selling, right? Panic selling. The algorithms, basically, no humans, just the algos. And then there were so many regulations after that you have to have oversight. You cannot let these algorithms do everything. We need to check and balance, stuff like that. I think we are not there yet to have AI do everything for us and we be so relaxed and say, okay, that's good, productivity goes up. But even if we go there, even if we go have an economy that there's so much automations everywhere, I think we're gonna hit some disasters for sure. There will be some disasters and there will be some regulations coming out of it. So maybe there will be some limitations, right? Some jobs, humans have to do it. For example, I'll give an example. I would never let AI be a babysitter, if you ask me. I will not let AI to babysit my kids or your kid, whatever, right? Because that's a very human thing to do, like the needs and everything, So I think I wouldn't even let most of people do the job, let's say AI, right? So I think some of the stuff cannot be, but again, AI is a productivity tool. We may hit a time that GDP grows maybe 5-10% because of AI. So now we have more companies, because now, for example, you have an idea. It was more expensive to run a company with your idea in the past. Now you can have AI tools to help you do that. That's the famous $1 billion company. I don't think we are yet, but maybe we get something like that. A smaller team, they can do way better jobs. Again, AI is a democratization of knowledge and skill. And so that means that maybe the same way that we have these AI these social media influencers in the attention market, we may have solo enterprises that are small and they came out of nowhere and now they're generating big revenues and they're important part of the economy. So we may have something like that coming up, right? Maybe it was very expensive to build a reactor in the past. Maybe now with AI, the research, whatever, it's much cheaper to do that. Again, safety, I'm not sure. And I think maybe some other sectors of economy will open up. For example, all these AIs, they need people to verify their output. They need people to verify whatever, especially for high-stake questions and high-stake jobs. So maybe there will be people that just be hired to oversight these AIs, right? Maybe by law or even to make sure that we get them right. And also, I think what we're gonna see is the job market will definitely change. We already see that the job market is changing. So I think we need people to really adapt to that, adapt to those skills. AI is a good learning tools. You can learn faster, so you can change gear faster, but you have to be really careful. Again, you have to be really careful that decision that you make really matters. So I do not encourage chasing the hype, but I encourage to plan for it. So that's what I can tell you.
Okay, I guess you mentioned like there's some jobs that like you would only want humans to do, like babysitting, but like in the context of trading, what kind of jobs would you never want an AI doing, even wherever it goes, like 50 years in the future?
Good question. So I think, for example, if you go back to trading floor 20 years ago, let's say out of 1,000 people, you have 500 traders, you have 300 sales, you have 200 technology and quants, something like that. Fast forward to 2020, you have out of those thousands, you may have 300 traders, you may have 300 sales, maybe 200 sales, 200 traders, and 600 technology and quants, right? If I go 10 years into futures, I think the sales number are gonna stay somehow the same, the people in sales, because guess what? If you want to get money from an investor, I don't think your AI agent can convince a billionaire to give them $1 billion. I don't think so. You need really to that's not the job of an AI. They cannot build trust. They don't understand hierarchy, whatever, right? I can go on and go on. I think sales will stay the same. Technology will be smaller. So you don't need 600 developers to do the same job. Maybe 100 of them will do the same job even better, right? And you may have other people. You may have a luxury to hire whatever, I don't know, whatever is part of the, so you may, the whole business may become smaller, run with smaller people. You may make some amount of money with smaller people, which means that those people are gonna go either to other sectors, they're gonna do something else, they're gonna start their own businesses. I don't know what's gonna happen, but with the current tasks that are available in the financial market, we're gonna have less people doing that. Maybe there will be new tasks coming up. I don't know what's going to come up, because this is, the market is very what you call it, it's very dynamic. So there may be an AI department coming up. So maybe you need people to take care of your AI models. So you need to hire 100 people to do that for you, right? Maybe you need people to clean up data, or maybe help the AI to clean up the data. Or I don't know, to be honest. That's a hard question.
Thank you.
Any other? Yeah, Raul?
Okay, so given like the current move for like large foundation models like TradeFM or Deep LOB, and these market foundation models are getting better at specific tail end simulations or specific behaviors, how do you think like academic scale papers and projects should be scaling or focusing towards to provide like meaningful contributions in the industry? Should we be focusing more on like specific niche regimes, or something more like regime detection, signal quality assessment, stuff like that?
To be honest, I think we need more people in academia. Sorry, less people in academia. I think academia is overpopulated. We have too many academics. We have too many PhD students. We have too many people. And we have seen that effect on the job market. The job market is not doing well because of all the graduates, and the economy having, especially in Europe and the UK, so having stagnated, and that's not good. We see people in New York, you have a PhD, you cannot afford to live, you cannot have a job, you cannot have a place, right? You barely pay your rent. So I think because AI is a good tool for research, I think we're going to have some kind of clustering effect, which means that the very good researchers, they're going to use AI to do more, and mediocre or less than average researchers, they're going to be out of job. Unfortunately, I mean, that's what we're going to see, which means that, and also, at the end of it, I think AI is going to be a disruptive force for academia and educational institutes in general. So I don't think anybody in maybe 10 years time, if you tell somebody you need 4 years of your life to get an engineering degree, people would laugh at you. So maybe you can do that much faster because of the new tools. And maybe in some specific domain, like let's say if you want to do surgery, you need to really spend 7 years. But I mean, in other, like in coding or computer science or math, the stuff like that. So I think education is going to happen faster, unless and that's not in favor of the academic institutes, because they're going to make less money, I would say. Again, we're going to see a democratization of knowledge and skills. And that's not in favor of institutes that provide those services or give you those skills, right? It's the same. So I think academia in 10 years is going to be the same where CNN is today. Big institution. So you're going to see a few survivals. You don't have many channels now. You used to have new channel every week 20 years ago. We're not going to have many new institutions, but the same Harvard is going to be there. MIT is going to be there. They're going to do research for everyone. They're going to make money. They're going to be profitable. But I don't think not very well-known academics, they're going to survive. And going back to the question, I think there's still tons of questions to be answered, even about AI itself. We don't really know much about AI. We know how to use it, but we don't really know, much about what's going on inside these big trillion parameter models. Where is the ethics? If you want to use it for high stake jobs, you really need to understand it, and we are not there yet. And I think, and sometimes it hits a wall for some of the, yes, it's good language model, understand grammar, now understand logic, whatever is that. I don't think it's gonna be so good in other stuff. Maybe we need a different architecture to make it work, So I think there will be research, but that doesn't mean that's gonna happen in academia. Maybe that happens in the big tech, what we see now, all these big labs, DeepMind, there's so many good things coming out of those labs. So it's going to be fragmented academia, smaller academia.
Yeah, I see Ken from our audience raised hand. Ken, feel free to unmute your microphone. And
yeah, for sure. First, Arman, thanks so much for taking the time to talk to us today. Very, very interesting explanation of LLMs. And I had one question about, I believe it was slide 10, where it was the task complexity on the x-axis and the AI proficiency on the y-axis. And you were discussing specifically how one of the main skills with like the human piloting of these LLMs right now is how you split up large tasks into many smaller tasks and how you systematize that. I couldn't agree more. That's been my experience. I think that's been everyone's experience. But a question I had is that's also kind of the whole point of agents, right? Is the agent understands the wider task and it's able to assign subtasks and kind of complete it effectively in that way. So something just I've been wondering, and I'd love to hear what you think out of curiosity is like at what point will the agents also be proficient enough to divide a task adequately or even more effectively than the human would divide the task into proper subtasks?
Thank you, Kian. That was a very good question. So one thing I forgot to mention is when you go from that high complexity to low complexity with an algorithm, guess what? You need experts to do that. So if I'm looking at a problem in accounting, I need an expert accountant to do that. In law, the same. I need an expert lawyer with many years of experience, teams actually, not just one person, to do that. So I think what we're going to see is, SaaS is, people say it's dead. I don't think so, but we're going to see different SaaS. We're going to see expertise as software, which means that a bunch of lawyers, they sit down, they break down all these laws, how you're going to do as a junior lawyer, and they're going to provide that as a service to other companies. So I think we're going to see that. That doesn't mean that OpenAI can do that because they need to hire those very expert people and they need to pay them. They cannot do that in every profession. And they don't have the data in every profession. They did it with coding, by the way, because there was tons of coding data available and they have tons of coders themselves, right? So they did with coding. Now they're doing with math slightly, but I don't think you can do it. It's not feasible and economically profitable to do that with all the fields and all the expertise that we have. What we're going to see is going to be accounting firm come out or a startup come out, do that and provide that to other people. I think, but that needs expertise. That really needs someone who understands the problems and they know how to take it from here to here. The algorithm, it's very important. I'll give you an example. Why algorithm is so important, even at the age of AI. AI cannot build algorithm. I'll tell you why. Let's say you have Instagram, you have TikTok. Why TikTok suddenly become so popular? Instagram was there, same capability. There's still videos, right? Short video, whatever, right? And the reason was TikTok algorithm was better and still better for short videos. It's more addictive, let's say, right? So you go in, you check it out. I see so much cool stuff compared to the other one. Instagram, they have the most resources, they have the smartest people, but they couldn't build TikTok, and somebody else did. So it's gonna be the same with AI applications. Your algorithm at the end of the day is important. It's not just the model. For example, the difference between Opus model and ChatGPT model, GPT 5.4, it's not that much, but when you use the platform, it's massive.
Yeah.
For some tasks, not all the tasks, for some tasks, cloud is way better. Anthropic is way better. They have 50 billion revenue this year, I think, something like that, right? It's like a company, it's like a country. And the reason is their algorithm. The way that bring down the task into a smaller one, you know, the way you interact with it, so many things. I'm not selling them, by the way. It's not a sponsorship. It's just how it is the algorithm.
Yeah, no, I agree with you. And just a quick follow-up on that. You mentioned first how the main point for like individual business expansion is going to be like training an effective lawyer GPT, accounting GPT, etc. But from what I've seen, a lot of the issues with this business idea is you're dependent on you're dependent on Anthropic, you're dependent on OpenAI for them not killing you, for them not going into the same line of work as you, because they could A, cut you off like Anthropic has already done to Cursor, to XAI, etc. Or they could just do the product better and integrate it better. So I guess like I don't want to take too much time, but how do you think that individual business people, like entrepreneurs trying to start these specified LLMs, are going to be able to do that while not just having the risk of being wiped by one of the larger labs?
Good question. So in the large scale, if you believe in capitalism, the winner takes it all.
Yeah.
The winner takes it all. So if I'm Anthropic, if I have so many customers, lawyer GPT comes up, either and I see they're making money, either I'm gonna eat it or I'm gonna buy it. Probably gonna buy it easier, right? That'll happen with Apple, Amazon, all these guys ballooned up, right? In this economy. I think it's gonna be with AI. But again, even at the age of Apple or Google, you still have small companies make some living, right?
Yeah.
They may have some niche that comes up, and I think that's just the nature. So the big ones, yes, they're gonna be monopoly somehow. The small, but there will be still smaller, mid-sized enterprises on AI as well.
Thank you.
Thank you.
Do we have any questions here? Any questions from our attendees on Zoom? Okay, I think we can probably stop here. And thank you again, Arman, and thank you all for joining us today. So we are looking forward to having more events and distinguished guest speaker series like this. And I would also love us to be like in touch with you and your company. So, you know, it would be great if you can also provide us with more details about your activities and keep us updated. And I wish you all great rest of the day and great weekend ahead.
Thank you very much, Ali. Thank you for having. I wish you the same. It was great meeting you all. And if you wanted to get in contact, you can find me on LinkedIn or send me an email. I'm going to share the slides with Ali so you can maybe see those slides as well. And I wish you a very good weekend as well. Thank you very much.
Thank you so much, Sean.
Bye. Thank you.
Thank you.
Thank you.
Thank you, everyone.
Okay. Yeah, I think we can probably call it a day. And next time we will have our project updates, so we can probably just keep next time for the projects updates and presentations.